You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Everybody, that music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com. If you haven't been over there in a little while, check it out. A lot of cool stuff percolating over there, including a lot of great earnings, vol data that you really can't get anywhere else, and it's all free because we like you folks. So check it out over there. Of course, links to all of our fun shows and a whole bunch more. And if you need more in your life than the 2 shows roughly a day we're hitting you with, you want to go above and beyond, you want to get great pro Q&As, a lot of stuff on the vol space lately. We've had Scott Nations, the creator of VolQ, in the hot seat 2 weeks ago. We had Simon Ho, the creator of Spikes and BitVol, in it this week. So a lot of great vol Q&A going on in the hot seat. Of course, Options Oddities coming up a little bit later today, where we break down all the fun madness going on in the world of unusual activity, giveaways, a whole bunch more. You know where to go. theoptionsinsider.com/pro, or for you cool kids out there, /secret club. But don't tell anybody about that latter part. It's just between me and you. And let's see who's joining us on the old program today. First, by the way, our first show back in the studio after the fun live ensemble we had on the stage last week. That was fun to have an audience again, a live audience in person for Volatility Views. Obviously, we have live listeners every week, but in person, seeing their faces, it's always fun. And I'm joined once again by the guy who arranged all that last week, the meatball of the pit, a.k.a. Mr. Mark Sebastian from optionpit.com. Mr. Mark, welcome back to the show. And have you recovered from the big live event last week, sir?
Yes, finally. I was extremely tired when I got back from Chicago. I forgot what that place could do to me. What a fun time, though. It was so good seeing you and getting to do it live with a live audience. Like you, I had missed that.
Yes, it was quite fun. Good to see the Rock Lobster, too, even though I hear his stay in Chicago was a little bit longer than he intended.
Yeah, it was. It was. That was funny.
Hey, 3 more days of deep dish. What's the worst that could happen, right? There are worse things indeed. And also joining us, holding down the MIAX hot seat for the first time, a newcomer to the program and indeed to the network, Mr. Joe TIGAY, the portfolio manager at Equity Armor Investments. Joe, welcome to the Volatility Views program.
Yeah, thank you very much for having me. It's good to be here.
And Joe, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the financial and indeed volatility space, as well as what it is you do day to day at Equity Armor.
Yeah, thanks for that. Yeah, I'm at Equity Armor, portfolio manager. We are fund managers at the Rational Equity Armor Fund and the Catalyst Hedged Equity Fund, a couple of 40 Act funds, which are a volatility hedge strategies. We have a NASDAQ hedge and we have a large cap value hedge in the Rational Equity Armor. So Equity Armor provides advisors an opportunity to get into the market with a little less risk from experienced and veteran traders. The three of us, three managers at Equity Armor, are all former CBOE options market makers, combined 70 years of experience options trading between the three of us, and early adapters to the VIX. Shortly after when the VIX became a tradable product, we were quick to step into the pit, became very active in the early going of the VIX trading, and really were a mainstay and a big presence from 2007 through 2012. Essentially, our hands on every single trade that went through that pit, through a lot of crazy times, a lot of times which seemed like a lifetime ago, but things like obviously the Great Recession and the flash crash and the European debt crisis and the fiscal cliff. It seemed like a lifetime ago, but they're still familiar, and there's still important lessons to be remembered from those events. And a lot of things we're dealing with now are similar to what we saw back then.
A lot of lessons to be learned from the past when it comes to volatility. And let's see if we can learn some right now. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what the heck is trading and trending out there from a vol perspective. Of course, talk some unusual activity, all the fun stuff going on in the world of volatility right now. And as of right now, we are seeing a lot of green back on the major market screen. It's been a couple of sessions now where we've maybe seen a little bit of optimism out there, a little ray of sunshine peeking through all of the gloom and doom that have been dominating the headlines for the last few weeks. We are seeing perhaps consumer sentiment a little bit stronger, consumer activity a little bit stronger than expected, inflation rate perhaps not as dire. Now it's hard to say, 6.3%, let's throw a party, but it's not as dire as some people were thinking as well. So that combo, that 1-2 punch, maybe bringing a little bit of life, a little bit of sunshine here to the markets. And of course, all that means we're seeing green yet again. S&P up 1.8% as we kicked off the show. The Dow up 1.15%. And the NASDAQ, once again, leading the charge, up 2.5%. So the S&P now back firmly north of the 4,000 level, 4130 or so as we're kicking off the show here. So quite the swing from our last vol views. That means most of our vol friends are looking a little bit lighter this week than last week. Spikes when we kicked off the show, 26.25. That's down almost 4 points, 3 3/4 points from where it was this time last week. VIX cash is at about 25 3/4. That puts it down about exactly 3 points from where we were this time last week. VVIX, very important number. I want to get back to this in a second. VVIX 93 3/4, down 11 points. And historically, very low level. Again, we'll get to that in a little bit. VSPIKES, a.k.a. the Viking, also at historic levels. This one launched last year, so we have a short time frame to really analyze this one. But we've been saying since it launched, the high for the year was 205.85. That was set back on December 3rd. And the low was 128.15, which is pretty much right around the time that it launched back in November of last year. So we broke that today, 116 in the Viking, I should say, the VSPIKES, down 22 points from where it was this time last week. So pretty much every vol measure we have is showing us not a heck of a lot of it right now, and that's pretty interesting. Let's go around the horn. I want to come back to that in a second, but let's start with our guest. We'll start with Joe. Joe, obviously a lot going on from a broad volatility perspective right now. What is catching your eye and lighting up your tape in the vol space this week, sir?
Yeah, well, I mean, it's fascinating to see. You mentioned the VVIX. That really does stand out at the lowest level since pandemic set in. So certainly that's that's a sign. I know we're heading into a long weekend, and you often see volatility levels suppressed, but this certainly is suppressed. It is surprising for me to see how low it's going, and especially given how much the market is still realizing. We have not seen any gap between the implied vol and the realized vol, which you normally see when you see the correction that we've had so far. So it's fascinating to see these lower levels, and I would have thought in volatility, and really that the market has been trending lower all year long, but volatility has not really picked up and remained as elevated as it was in February. So it's interesting to see. There's a lot of explanations as to why that could be, but the only thing that really matters is the price of the market and where those options expire.
Mr. Mark, same question for you, sir. What is catching your eye and lighting up your tape on this yet another interesting vol week in the book, sir?
Yeah, options are cheap. It's interesting that, VIX futures have not really moved at all as this rally has extended. In fact, they're getting a little bit stronger. You got to wonder how much they're going to be able to push things. But, when I look at VVIX and then I look at downside VIX options and I look at the flow that we're seeing today in puts, makes you go, I wonder whether we do have another leg up.
Let's get to that level I was talking about before, that VVIX. Of course, the vol of vol listeners, as Joe was mentioning, we are kind of flirting with historic levels here. It used to be for a long time, for the majority of the run of this show, which is nigh on a decade now. When you saw VVIX, it had a pretty reliable range. We got down to around 75. That was usually pretty low. And around that level, it was going to start getting frothy, and it probably would bounce from there. And when it got up to around 125, you knew things were getting a little bit elevated out there. And chances are when it got at either range, it wouldn't hang out there for long. Obviously, it could break through, particularly to the upside sometimes, but it wouldn't hang out there for long and usually come back into that range. Obviously, the pandemic blew a hole in all of that, and we pretty much spent the better part of the last 2 years well north of the 100 level. So a very different frame of reference for VVIX. In fact, you have to go back all the way to April of last year, April 1st, I believe, to find the last day that we were actually through the 100 level out there in VVIX. So it's over a year now that since we have broken through the 100 level in VVIX. We flirted with it a few times, but we always kind of bounced right around 102, 105, something in that range. Never really broke it. I broke it again in September of 2020, ever so briefly, about 99.64. And that was pretty much it. So you're only really seeing, since the onset of the pandemic, we've really only seen a couple of sessions where VVIX has broken the 100 level. So this is some pretty interesting and rarefied air we are in right now. Mr. Meatball, we'll start with you. I'm curious for you. Obviously, you watch VVIX all the time. We're back below 100. Did that surprise you? And what do you make of this nigh on historic level we're hitting again, sir?
Yeah, I mean, the part that's interesting is, when was the last time the VVIX was below 100 and the VIX was still 26?
Yeah, that's the other part of the puzzle, right?
It's really odd. There's just not a lot of demand. Everybody that's hedged is already hedged. Nobody's really buying options. The only real buying flow we're seeing today, and I know we'll talk about that, is in near-dated puts. And there's some demand there. But even on that end, there are some puts that could 100% end up in the money that are just dirt cheap. I'm watching this market and I'm going, what exactly is going on here? Because it is certainly interesting and sets up for, I think we're set up for a potentially wild move in vol, either a complete tank job next week, or they're going to run it right back higher over 30.
It does seem like, if par is the new 75, it's the new low band of VVIX right now, right? Then it does seem we are poised for a move somewhere. It does seem like we're setting up for that. Joe, is that your takeaway as well? Were you as surprised as Mark and I both were that we broke so aggressively below 94 now in VVIX? Haven't done this pretty much, you're right, since the start of the pandemic. So we're, for the recent modern history here, it's a historic level. And then B, what do you think this portends for the vol space going forward?
Yeah, that is surprising. I'm surprised. First of all, I'm surprised that this is the lowest level we've been since that long. But second of all, I am surprised that we're having this break now. However, if you look at the chart of the future just the past few weeks, we're kind of just bouncing around 27, 28, 29, 30, 31. And I know that's a big range, but we haven't really made any defined move out of that. I think that the traders into this 3-day weekend are just saying they're expecting that range to continue. No matter what way the market goes, because if the market does have a rally, like the volatility will stay elevated, and the market does sell off, volatility is not going to get too elevated. So essentially, the futures, like you're saying, they're a little sticky today, and they're not coming down. And maybe they think that volatility is going to come back next week after a 3-day weekend. And then on Tuesday, if the market does sell off, they'll be sticky again. They're not going to go up. If the VIX does spike to 33, 34, the futures aren't going to move as much with it.
Speaking of the futures, let's get out there right now. Spike's futures, as we talked about with Simon just in the Pro Q&A, continuing to grow, continuing to evolve. In fact, they're working on, he hinted at the Pro Q&A this week that we should be seeing a 1X pretty much so effectively a VXX for Spikes and a 1.5, so modestly levered ETF. Both of those should be getting approved and hitting the marketplace sometime in the next month or so. So that'll be interesting to watch the impact that has on the Spikes futures and indeed going forward, of course, the Spikes options, which is what everyone is here to talk about here. So Spikes futures evolving out there. VIX futures curve, I guess you can call it evolving a little bit out here. I mean, it's been kind of, I think we've been talking about it being weirdly flat for a while, and that's kind of what we're seeing a little bit. Again, that front portion of the curve is losing a little bit more steam, as you would expect. Coming into the start of the show, we had the June future down almost 2 points, about 1.9 points, and the July future down a little bit less than 1.5 points, about 1.4 points. So a little bit of that steam coming out of the front portion of that curve, as you would expect. But outside of that, not a heck of a lot going on, and that middle portion is still kind of weirdly flat going all the way out to almost December. Mr. Mark, what are your thoughts on what we're seeing out there or perhaps not seeing in the vol surface this week, sir?
Yeah, VIX futures are back in a contango after kind of being backward or being flat for the last week. We are in a place where, this should put a little bit of weight on UVIX and UVXY and some of those names. We should be seeing some vol come out of VIX itself. I mean, what we really should be seeing is the VIX slowing down with what's going on in VVIX, VIX futures pulling back. And, until I see that the VIX really make a run at 20 and VIX futures break the 27 level that Joe was talking about, I'm not so sure that I buy any rally. But if you were going to say, do we have a recipe for us to kind of break out of the bear market trend we saw for the first 5 months of the year in terms of volatility? This is it. VIX in contango, VVIX low, VIX dropping, maybe making a run toward 20. That's kind of a recipe for a rally.
Making a run towards 20. Crazy town out here. Joe, same question for you. What are your thoughts on what we're seeing or perhaps not seeing out there in the VIX futures this week, sir?
That's a great question. Those are great points. And that's usually what Mark was talking about, is what you would usually expect. Although you also usually would expect when the market's making new lows that we're seeing VIX making a new high. So we did not get a VIX new high when the market was making new lows. And just because the VIX is now making new lows and the VVIX, and by the way, the VVIX is making new lows, that doesn't necessarily mean that the VIX needs to make a new low. And just because the volatility is saying one thing, it doesn't mean the market or the underlying has to do what the volatility is saying. Sometimes it does the opposite. And for me, it's really been, there's been a lot of traders just kind of getting ahead of the moves. A lot of this was telegraphed. People knew the Fed was going to be tightening. We knew inflation was bad. We knew that the economy was hot, needed to cool off. And people were positioned short. And accordingly, when the market sold off, any long vol decided to take some off at that point. And that's why you saw the VIX not going so high, or not going as high on the second leg. We saw lower in April and May this year. So yeah, for me, you can't predict it precisely. They are long-term, like you have strong correlations, but it's not every day. You can't say, well, the correlation's 1, because we know that's not true. So they're just signs, they're just predictions, and we'll have to wait and fully see what actually happens. For me, I do not trust this rally. I think they're that just because I don't trust it doesn't mean there's more that could potentially come. For me, this is all about valuations, the sell-off. We were way too valued when we came into the year. And we're right about the middle of the pack in terms of valuations. We look at the NASDAQ and let's look at the S&P. And so it just comes into a point, when is the time when people say, I'm going to step in and say this is a good value for me to buy the market, and we're going to be able to rally or end the sell-off or the downtrend. And for me, that is, number one, dependent on how much cash people still have. And with high inflation, I think that's really tricky. And number two, how much does the economy slow down? So if the economy slows down, then valuations also need to go lower because companies are going to be earning less, obviously. So for me, I don't think we're at that point yet. I think the gas prices have been elevated for about a month and a half, 2 months now. That's really going to start hurting people, along with all the other elevated prices that people have. I think it's just inevitable that the economy has to slow down, and that will filter into asset prices. And I still think there's more pain to come.
But Joe, the S&P was below 4,000. You were legally obligated to buy it at that level, I think.
Legally, I was obligated because now it's back above 4,000. So that was obviously the right move to do. And certainly it looked attractive from where it was, just because people were positioned. In my opinion, people were just positioned short at 3,800, at 3,900, and that's why we're getting the pain trade today above that. And whether or not we get a continuation rally and we go up another 1 or 2%. In these bear markets, it really is kind of meaningless. I think just looking at the big picture, valuations, I don't think this really ends until valuations get overshot to the downside. The rally didn't end until the valuations were overshot to the upside. So if you look at S&P historical valuations, we'd probably be looking at 15 or under. If you look at PEs. So right now we're at 20. So there's still some downside there. If you look at the NASDAQ, it's still even worse. Look at downside potential. PE in the NASDAQ would be all the way down at 20. We're still over 35 for the NASDAQ. So there's potentially a lot of pain still. The only way that valuations could catch up, it would be the economy were hotter than people expected, or companies grew faster than people expected. But if you look at earnings the past quarter, that does not seem to be the case.
We'll get to earnings in a little bit. By the way, I see the chat talking about the new Top Gun movie. They're asking for the danger zone again. You're right. I got so busy we didn't play. Of course, the way vol is looking right now, we could break the 25 handle to the downside by the end of the show, in which case we would be out of the technical danger zone. But tell you what, since you guys asked so nicely, I'll see if I can get Mr. Loggins out of the green room and queued up for later in the show, maybe around the crystal ball, because that is the most dangerous portion of the show. So it does seem appropriate to bring Mr. Loggins back for that. Let's head on out to the SPIX options now. Again, SPIX, they're all kind of waiting for those new ETFs to come online. By the way, Simon hit me at a cool new SPIX Hub website coming soon on our Pro Q&A on Tuesday. Going to have a lot of cool data he says is not available right now. So that's going to be pretty interesting. I haven't even seen it yet, so that should be kind of fun. All right, now the top 5 positions. Let's go really quickly through SPIX options. Let's just do them really quickly. Number 1, we got the June 70. So upside calls, still all the rage. We'll get to that in VIX in a second. Number 2, the July pars. Oh yeah, good stuff there. Number 3, we got the June 25 puts. Number 4, the June 85 calls, and rounding out the top 5 in SPIX, the June 80 puts. Out to VIX options land. They're putting up some numbers today, which is interesting. Going into a long weekend with markets rallying, vol coming off, usually not a recipe for a strong VIX options day, yet we're seeing pretty decent paper. In fact, we're already beyond the ADV. The ADV has shrunken a bit since our last show, down about 17,000 contracts to about 575,000. Right now, so far today, we already have almost 600,000, 596,000 contracts on the tape. Let's break down the top 10 size positions in VIX options right now. Then I think we have some movement in one of those, so I want to talk about that next. What is the number 1 position in VIX land? Let's find out. Let's go out to the top 10 first. Number 10, 134,000 of the June 22 puts. Only cost you 134,000 contracts to break into the top 10 in VIX. That's not a huge amount of paper when you think about it. Number 9, $1.35 of the June 30 calls. By the way, the top 10 in VIX land right now continues to swing. Last week, it had swung to 50-50. So the market was kind of playing a coin flip, calls versus puts. This week, 60-40 puts over calls. So again, perhaps the market, at least the top 10, being a little bit prescient there. Number 9, 135,000 of the June 30 calls. Number 8, $1.37 of the June 26 puts. Number 7, 141,000 of the July 20 puts. Number 6, $1.47 of the June 35 calls. Number 5, and here we go, some of the fun ones, $1.48 of the Aug 75s. Number 4, 166,000 of the June 23 puts. Number 3, 200,000 of the June 25 puts. Number 2, 244,000. Ooh, that's starting to rival our number 1. 244,000 of the June 24 puts. That's a lot of June 24 puts. And then number 1, with just by about 10,000 contracts now, they're catching up, are the October 75, still open, listeners. 254,000 open there, but maybe that's changing. Let's go out to today's paper to find out. Like we said, almost 600,000 contracts on the tape. As we were kicking off this segment, the most active contract out there today, listeners, 110,000 of the Ox 75s. Could he possibly be unwinding this thing now? That would be hilarious if he waited till now when he had, I think, arguably much more opportune moments to do so, but we shall find out. Number 2, we have 71,000 of the July 75, so maybe he's rolling some more out to October. Number 3, 70,000 of the June 24 puts, the aforementioned boatload of puts. And then number 4, 26,000 of the July 35s, and number 5, 23,000 of the Oct 35. So, Mark, there it is, 1 by 5, 23,000 of the Oct 35s, 110,000 of the Oct 75s. What is our friend up to today? Is he unwinding, or is he, dare I say it, putting on more?
It's a roll. It's a roll. I saw the trade. They went up at the same time. So this is almost certainly the trader unloading some of their July inventory and rolling it back to October. So they're still hedging. They're still protecting. We should see an increase in open interest. The other order that's really, I think, eyebrow raising is the amount of volume on the June 24 puts going up today. We saw a trader swoop in, pay 63 cents for bulk of the June 24 puts. They are a big buyer, over 70,000 on the tape today, and they're continuing to be bid. The other one that's interesting is they're paying 15 cents for the 22 puts. That seems cheap to me. And if you're saying, boy, that does seem cheap, well, the VVIX is 94 now. It's not 120. So some of these downside puts, there is some potential value. Buy by those for 15. We see VIX maybe make a push to 22. Those will double in value.
Yeah, a lot of fascinating stuff going on here. Joe, I'm curious for you. I'll get to some of the rest of the trades of the week in a second, but one of the ongoing threads that has been dominating the VIX discussion for the better part of the last 5 or 6 months has been this just explosion of interest in, shall we say, extreme upside positions. The 75s, the pars, 110s, 120s. This still right now, the biggest position open in VIX options right now are the Ox 75 calls with about 250,000 contracts open. Again, we were kind of just discussing what's going on with that paper today, but I'm curious for you if you've noticed this trend of, shall we say, extreme upside call interest, and what are your thoughts on it?
Yeah, I've noticed that. I found that really interesting. Real quickly, I want to go back to the June 24s, though. It's interesting. We're talking about the biggest trades of the day being purchases, but we have the VVIX so low. When I'm a market maker, and if I were selling those 24 puts, I would be thinking to myself, does this trader think that the VIX is going to be 23 in a couple weeks, or is he thinking this is a cheap spot to buy some vol? He's buying these puts and buying some futures. That'd be the first thing I'd be, playing a little detective work there. I'm always a paranoid trader as a market maker, so I'm always thinking, what is this trader really thinking? So yeah, that's always a possibility for me. So just look at these upside. That's nothing new. When I was a market maker, back in 2007 or 2006, people would be buying the 40s, and that would be like unheard of. But that would be like, whoa, the 40s are being bought right now. That's crazy talk. But no, that's always the case. People are buying upside. People are buying some just protection, the cheap option that will cover their book. But when you get up to 75, that doesn't really protect your book very much. I think a lot of the clearance firms have wised up a bit and say, well, they're still potentially very much at risk up here at 75. So yeah, that's just an interesting spot. Maybe it's some retail people piling on, thinking that the VIX could be some sort of a meme stock, some sort of gamma squeeze or something. It doesn't make a lot of sense to me. I think there's a lot better ways to make some money trading the VIX than looking for the VIX to go to the moon or something. But that is an interesting phenomenon.
Funny you mentioned paranoia. Second time we've talked about paranoia being beaten into you as a market maker this week. It's a good trend to have if you're an options trader. A little bit of paranoia never hurts you out there in the trading world. Let's go out to yesterday's paper. Also a pretty busy day yesterday in VIX land. 636,000 contracts on the tape. The big trade yesterday, 57,000 of the June 26 puts, followed by our old friend, once again, the June 24 puts doing 53,000. So maybe a bit of a roll, maybe a bit of a vertical, or just a lot of put love. Then we're back up to the, shall we say, optimistic strikes again. This time we're going above and beyond, to infinity and beyond, some might say. 41,000 of the D's 150s. I'll have to check. That might be the highest strike we profiled yet in VIX. We talked about 110s, 115s, 120s. I don't think we've seen a 150 pop in there before. So that might be a new record for sheer outlandish optimism in the VIX. Number 4, 31,000 of the June 22 puts. Number 5, 30,000 of the July 22 puts. Out to Wednesday, kind of a quiet day, a bit of an outlier there. Only 275,000 contracts on the tape. The big dog on Wednesday was 50,000, pretty much exactly, of the SEP 85. So even on these somewhat quiet days, these upside trades continue to percolate. And then we got a bunch of other nonsense really that isn't that sizable. Tuesday, 390,000 contracts on the tape. The big dog on Tuesday, 24,000 of the June 30s, followed by 21,000 of the July 24 puts, 20,000 of the July 30 calls, 20,000 as well of the July 30 puts. And rounding out the top 5 on Tuesday, 19,000 of the July 35s. Back to Monday, also a surprisingly light day, only 373,000 contracts. You can see why the ADV came in a little bit this week. And the big dog on Monday, once again, AUG 75. Someone really likes that strike this week. 40,000 of those, pretty much exactly, followed by number 2, 22,000 of the June 26 puts. Number 3, 21,000 of the June 35s. Number 4, 14,000 of the July doubles, a.k.a. the 55s, the June 55s, I should say. And rounding out the top 5 on Monday, 12,000 of the June 24 puts. Let's go out to the land of inverse craziness. Let's go out to SVIX land. When we kicked off the show, SVIX was a little bit north of 11, about 11.1. Obviously, SVIX listeners, the new inverse product out there, is still hanging out right about that level. It's up a little over half a point, almost 0.6 on the week. Again, not a huge option story yet, only 334 contracts on the tape when we kicked off the show. The ADV a little bit shy of 700, so it's kind of waiting to really become a big boy in the options world out there. The biggest position right now in SVIX are 459 of the June 13 calls. That's the biggest position out there. But Joe, I'm curious for you. It's kind of been a bit of a contentious topic, the return of these inverse volatility products, in particular SVIX, in the wake of everything that happened back in 2018. I just came back from the options industry conference down in Texas a few weeks ago, and this was very much a talking point amongst a lot of people. There were still a lot of people in the industry are still surprised that something like this was approved. Other people say, hey, these are great. We need more of these. Where do you fall on the inverse vol product debate, sir?
Yeah, well, essentially, it's a short vol product, and the short vol products I've seen a lot in my time now as a portfolio manager. Everyone's selling their own short vol strategy, and what I've seen time and time again when you have a short vol strategy is it looks good for a while. You can have a 5-year track record that looks really strong. But the thing about short vol strategies, if they're set in place, it's just kind of like a ticking time bomb. It's just a matter of time before, the very highly improbable happens on a daily basis, on a monthly basis. It's very improbable. But if you have this short vol forever, for years and years and years, it's actually very likely that eventually some event will happen which will blow the short vol up.
So I'm guessing you're not a fan of the re-release of SVIX then, sir?
Well, I think at this point, everybody knows what they're getting into. So I think people, I would hope, but I'm sure, brokers are doing their due diligence and making sure clients know if they're purchasing these things, the risk associated with them. And I was in the.
Oh yeah, I'm sure brokers are doing that because they're totally known for always making sure their clients are well informed.
And they always have their best interests at heart.
Oh, 100%.
and
100% of the time.
they would never take you out of your position on the low. But I was in the bit when the ETFs and the ETNs came out, and they were listed in the VIX, and they would list these upside calls in the VXX, for example, and we would just sell them and like not hedge them, and it was just like known that this thing was going to zero eventually. So it just makes sense that these inverse ones would be so popular. And of course, the short side on those ones were so popular forever. That was just all about the volume again. And of course, we all know what happened there. And it's just a matter of time. It was essentially a short squeeze, obviously. And for me, one of the reasons that led me into being a portfolio manager was I saw how popular these exchange traded products were with these futures. And I just said, well, these things are so popular, and 2 or 3 years in, people realize that these things have just lost money over time. They figured out what contango was. They figured out that these things are going to bleed away predictably over time. But yet, so much money was still piling into them, and I just said to myself, well, maybe there's a better way. There's just got to be a better way to do this, and that's what we did at Equity Armor. We developed a better way to buy and hold VIX futures. And you can see why it's so popular to hold the VIX futures versus any risk asset, because, of course, it has a very strong negative correlation. And what's even better is that when you can buy and hold it, is that that negative correlation leads into like natural rebalances where you have one component that's higher and the other component that's lower. So that's really led to a lot of success for us. But it's really interesting to see that these products still have a lot of popularity, even though people at this point know the perils associated with owning them.
There you go. All the drama around XIV and VXX led to the birth of your business there, Joe. So there you go. You should thank these products at the end of the day. Speaking of drama products, so not quite as dramatic, we also have UVIX out there as well. That is the other side of the coin, the 2X levered VIX product. That was at about a 17.25 when we kicked off the show, down about 2 points. So not exactly lighting the world on fire on the levered front right now. Doing decent paper, though, from an options perspective. Remember, we had speculated this would be the bigger hit of the two from an options trading perspective, and that seems to be the case. We're seeing an ADV of nearly 2,000 contracts right now. It's up nearly 500 this week. That compares to the ADV of SVIX of a little bit shy of 700. And UVIX, so far today, had already done about 1,300 contracts out there. By the way, there is one big position in UVIX right now. The 19 calls in July, 3,365 of those are open. That replaces, I believe, the May calls that went away last week. So there has been one sizable call position pretty much for the few expirations we've had now, this is the second. But there has been one sizable kind of out of the money call position in both of those. Obviously, I think the Mays were pretty outlandish. I think they were the 30s. I don't think that one worked out too well. But let's see if the 19s in July here, followed by 3,000 of the 27s in July. So maybe a bit of a 1927 vertical out there. Either way, that's kind of the big dog right now in UVIX. Mark, anything catching your eye in our two new entrants to the game, SVIX and UVIX this week, sir?
Just the volumes of the actual stocks continues to go up. UVIX is doing, pretty decent volume now. And, at a really good clip. Today, UVIX has already done, 1 second here, folks, and I will tell you, UVIX is at about 726,000. We've seen some days where that's gotten to over 3 million shares traded. I think you could certainly say these have been a success, and they will likely continue to be a success, just based on how much stock how much volume these ETFs are doing. Yeah, we got 700,000 of the SVIX trading as well. Both of those very interesting here.
What else is interesting, or perhaps not, I guess, depending on your point of view, is what's going on out there in VXX. Maybe starting to perform a little bit like you would expect. It's still a long way away from being the product it once was. Coming into showtime, we were at about 22.25. That puts it down almost 3 points, about 2.9 points from last show. The volume does continue to suffer. The ADV is down to about 120,000 now. It's down 10,000 from this time last week. And so far today, we've only seen 64,000 contracts. You can't really blame people who's trading options on this thing. It's kind of a complete wild card at this point. Let's do a quick couple of top 5 or so positions in VXX. Then Joe, I want to get your thoughts on this one as well, because this was kind of the genesis of your business here, VXX. Top 5 positions out there right now. Number 1, 69,000 of the AUG 16 puts. Number 2, 47,000. Of the June 16 puts. Number 3, 41,000 of the July 20 puts. Number 4, 40K of the July 19 puts. And number 5, 40K as well of the July 18 puts. Still in the top 10, it's all puts all the time. No one wants to touch a call in this product right now. And can you really blame them? Joe, I'm curious for you. You said earlier you kind of created your business around some of the drama with products like VXX and their ever-eroding characteristic. What are your thoughts on what's been happening out there of late? Barclays kind of seemingly washing their hands of it and all the drama that has ensued, sir.
Yeah, I mean, you can see the volume just evaporating out of it when they did that. Barclays taking their hands off of it made me I would not touch it personally. Just it's not something that I want to get involved with, because if it's not attached to anything, I mean, it really could go anywhere. That's just the danger to it. It's supposed to loosely follow these futures, but it's not tied to them. You can't exchange them anymore. So that takes it all away from me. Now, granted, yeah, I do think the downside is still where I would play it. I think that the potential of it to eventually snap back to par, or to where the NAV should be, is the reason why it's trading where it is. But for me, I would. There's other products out there that are tied, which would be where I'd be at right now.
Mark, you still working your downside put flies in VXX, sir?
Yeah, you can put them on pretty cheap, and at some point, I'm with Joe. It will eventually go back to its NAV, and when that happens, it'll happen rapidly. But that said, that is a highly risky and speculative play, so it's not for the non-professional to be jumping in.
Another product that is highly risky and speculative is UVXY, 1440 when we kicked off the show. It's still hanging out right around there, down a little over 1, about 1.3 points from where it was this time last week. The ADV also coming in pretty aggressively there, down to 307,000 contracts. That's down 38,000 from this time last week. Now, obviously, that's not all of our new entrants siphoning it away, because they're not doing anywhere close to 38,000 contracts, either of them, UVIX or SVIX out there. But still, interesting to see that ADV is eroding out there in UVXY after getting pretty strong for a while there. Today, looking pretty light as well, only 175,000 contracts. So we are north of half of the ADV, but not sure if we're going to get there today, just looking at the way the numbers are lining up. In terms of the top positions, we'll do a quick top 5 in UVXY. Let's go from the bottom this time. Number 5, 14,000 of the June 75 calls. Number 4, 15,000 of the May 16 calls. These are expiring today, so these are in the weeklies, listeners. Number 3, 17,000 of the May 20s, again, expiring today. Number 2, 20,000 of the June, expiring on the 3rd, 13 half puts, so once again out to the weeklies. And the number 1 position in UVXY, surprise, surprise, it's puts, 27,000 of the June 12 puts. Let's go out really quickly, see what's trading today. The big dog today, it's all May expiring today, as you might imagine. The big dog, 14,000 of the May 15 calls, followed by about 10,000 each of the May 14 puts and 15 puts out there. So interesting stuff. Joe, do you pay attention to the ever-eroding UVXY out there, and what are your thoughts on what we've been seeing out there of late, sir?
I do pay attention to it, only that I track it. I track it just the futures trade. So I track the front second month. I track what the NAV should be, what the index value should be. So I track that daily. So that is interesting. I think you mentioned about the volume looking light. Just broadly looking at the market, all the volume today has been light. In fact, it was light yesterday too. So it's another thing I'm keeping in mind with this big rally we've seen. It'd feel a lot better if the volume were really heavy. That give me a lot more conviction to the upside in the S&P. But considering it's so light, I'm still very cautious and still protective, I will say.
And let's see, cautious and protective, a good way to be out there these days. We have some earnings vol still popping off. We did a deep dive into that earlier this week with Matt, the producer of all this data for us over there on the advisors option. That will be hitting the network forthwith, listeners. So stay tuned for that. We had some big names popping off this week. Best Buy, Intuit, Zoom, NVIDIA, Snowflake, Alibaba, Dollar General, Macy's, Dell, Costco, a bunch of names out there. So check out the earnings move results, earnings season, and earnings trades reports are tracking a lot of long and short straddles and long calendars, even a few short calendars. Crazy talk. I know. Check them out for yourselves. TheOptionsInsider.com. But meanwhile, we have to go because we have a very contentious question of the week that we need to settle. It is time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail, the portion of the show where we answer your vol questions. Also, we turn the spotlight back on you, like we did again this week with our question of the week. And Mark, this week's question of the week, the genesis kind of came from our live vol views last week, talking to your buddy Chris there, who was looking for this dramatic capitulation in the VIX by signaling by just an extreme spike. He wanted it north of 80. He wanted it north of the levels we hit back in 2020 before he really would buy into capitulation in the broad market. And it got us thinking, there's a lot of people out there who are in a similar boat, but it is a contentious idea. So we thought we'd put it out to our audience this week. We asked you that same question. We know many of you are in cash. You're waiting to BTFD right now, but you're also maybe waiting for that other leg, that big vol spike, to really signal capitulation in the broad market. So if you're one of those believers, what level does VIX have to hit to signal concession in these broad markets? Gave you four choices: VIX north of 40, VIX north of 50, VIX north of 60, and VIX north of 70. And you guys have been chiming in on a lot of opinions out here. We have a lot of people chime. Let's go to this one from Bill. Bill Luby's been on the show many times in the past. He's not a believer. He says none of the above. He says he thinks a garden variety level of 35 will do it for him. He's thinking more along the lines of this is a slow motion capitulation / rounded bottom akin to the 2000 to 2002 sell-off that we saw before. And he's not alone. Some people are not believers in this hypothesis, so it's an intriguing one. Joe, we will start with you. What is your thought? Do we need an aggressive spike in VIX to really signal a true bottom in the vol space? And if so, what is the level you're voting for? And then, more importantly, what do you think our audience is voting for, sir?
Well, that's a great question. I think I'll start with the audience. I'm going to guess that they're waiting for that spike, but I'm actually with Bill on this one. I think we don't necessarily need that spike for the market to bottom. And he mentioned 2000, 2001, 2002 a bottom. And for me, it comes down to the type of bottom you're going to see. So in 2020, 2008, there was a credit risk and a contagion risk and just a serious market risk spilling over. And for me, that's the type of bottom you get when you get a V bottom. So you get a V bottom. Everyone tries to pile out at the exact same time. And then the government steps in and says, oh, don't worry, we're going to bail everybody out. And then the market just rips right back. That's when you have the credit risk type of bottom and you get a snapback rally, a V bottom. Now, in this situation, I think this is a valuation correction. I think stocks were overvalued. I think they need to come in. I mean, you throw in the top that instead of the Fed throwing money at the problem, the Fed's taking money off the table. So I think what needs to happen in this bottom is the prices need to come down and time needs to elapse so that earnings can catch up and prices can come lower. That's going to be more of a L or U bottom. It's going to take a lot longer and doesn't necessarily need to have any volatility spike.
Interesting. So you'd vote for if we had a fifth option, none of the above, that would be your vote.
Yes.
And what do you think our audience is voting for, really quickly?
I'm guessing they're voting between 40 and 50.
Okay, Mr. Meatball, same question for you. You were kind of the part of the genesis of this question. Are you a believer in this VIX capitulation theory? And if so, what level do we have to hit, sir?
Yeah, I don't know that we're going to see 80. I don't know that we're in an area where we're going to see panic. This feels more like a slow death than a guillotine beheading of the market. So, I'm closer with Bill. I think 40 will do. I think 40, 45 will do it. And I'm going to say, knowing how bearish our audience is, they're all looking for 80.
They're all way up there on the 70. Let us find out right now. Actually, they are, for our offerings anyway, they are picking the bridge that is the closest. That is north of 40 with 42.4% is winning the day right now, followed by north of 50, number 2, 24.2%. So they are keeping it pretty close. I think Bill poisoned the water, so they're a little bit towards the end, coming out saying the 35 level. And then we got number 3, we got VIX north of 70. So there are some hardcores out there. Nearly 22% of you saying you need it all the way north of 70, maybe even up to the 80 level. So that would certainly be interesting. And then VIX north of 60 never really got any love, only 11.5% right now. So close to half of you are saying north of 40, that's all you need. As we keep on rolling, we need one more segment. It is time to get difficult. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
I promised you I could see if I can get a little logins going here, too, for the crystal ball. We'll see. Let's try really quick. Let's see if we can get him out of the green room, listeners. All right, he's got to tune up his equipment. He's slow today. We'll see if we can get him on as we progress a little bit into the segment. But now let's go into the crystal ball, the most difficult, the most dangerous portion of really any podcast in the history of time, listeners, because we are attempting to grapple with what the vol gods hold in store for us for the coming week. Last week, we did it live from the stage on our live vol views there at the Drake. That was fun. It was myself. It was Chris Johnson from Money Market Live. It was both Mark and the Rock Lobster. So Chris was feeling north. Obviously, he likes a higher vol level. He's at, I think we are joined. Now let's see. There he is. Better late than never. Fashionably late. He is a musical superstar. He needs to make that dramatic entrance. All right. There you go. Hope the chat is happy. You got your taste of the danger zone. You going to see Top Gun this weekend? I guess we'll find out. But yes, last week, Chris was going for a danger zone. He was saying 35-27. Didn't quite get there. As we're coming into the end of the show, VIX is right around a 26 even. Spikes is at about a 26.42. Right above him, we had Mr. Meatball pretty much copying Andrew's pick from 2 weeks ago, going 27.85. So he might actually be the closest. From Spikes, he's only about 1.4 points away. So not within our frame of reference, obviously, but the closest in air quotes of all of us. Andrew is 29.52, and I was feeling a little bit more vol as well, 32.25. So pretty much no joy for any of us out here. We have a bunch of listener submissions. I'm looking here. I see a 26.75, 25.5. That's not bad. That's closer than us. We have a bunch here. I see a 26 handle here as well. Our producers will go through. If you are within our margin of victory, listeners, you will win fabulous prizes. That means, Joe, you have the dubious honor of getting to go first this week because none of us won last week. What are you feeling this time at the end of the show? Not the close of markets, but the end of the show next week for VIX, sir.
So 1 week from today?
1 week from today, yes.
1 week from today, we will be at 29.76. Exactly. You heard it first.
I like it. 29.76. I like a good, precise prognostication. That's always good. All right, 29.76 for Mr. Joe. Mr. Meatball, you were technically the quote-unquote closest. So I will allow you your choice. You want to go next? You want me to go next?
You can go next.
All right, I will do it. I have been feeling for a while a little bit more vol. I will have to, in light of recent scenarios, probably amend that a bit. I don't know if we're getting a 32 this time next week. I don't really hate where Joe was lining up there, but I want to give him a little bit of breathing room as well. So tell you what, I will say, are we north of 30 this time next week? That is the big question. I'm going to say probably no. I'm going to say 29.24. All right, there we go. Gave Joe a nice half point of wiggle room there. All right, Mr. Meatball, there's your mark at a half point. You want to come inside or you can go somewhere crazy?
Let's see. I'm going to say 26. 26
for the greasiest of meatballs. All right, so that's your mark of this week, listeners. 26-26 on the dark side for Mr. Meatball, 29 and about a quarter for me, and Joe, 29.76. I see our guest is already coming into the chat. He also wants to guess the opening weekend for Top Gun. I used to do that. I used to make markets on box office futures back on the SEBA. It was a nice little side hustle I had going on for quite a while. I'm kind of out of the game now. I need to get back in terms of the number of screens, the number of seats, and of course, obviously, pandemic has has thrown a wrench into all that. We got guesses of 315 million for opening week. That seems pretty high. I might sell that. Of course, if you're talking total global or you're talking domestic, that's a different deal. I used to make markets exclusively on domestic, so we weren't talking China or anything else. So I might sell your 315 there, Mr. Unlimited, and everybody else was making markets on that. All right. Normally we go out with our Vol Views music, but you know, it seems appropriate this weekend to have Mr. Loggins play us out. So Joe, you did an able job holding down the MIAX hot seat this week. Before we go, if folks want to reach out to you, see what you guys and the team at Equity Armor are up to, where should they go? What should they do?
Yeah, equityarmorinvestments.com. That's a great place to start. You can follow me on Twitter at Joe TIGAY. Any of that, all the above, give me a buzz. Shoot me an email. Happy to talk VIX, talk volatility, anything.
There you go. Hit him up over there at Equity Armor. And Mr. Meatball, a big live event is behind you. You can now breathe a little bit easily for a little bit. But if folks want to reach out, they want to see more stuff from you folks, where should they go? What should they do?
Optionpit.com. I'm writing VIX commentary every day. All sorts of stuff on what's going on. Go to optionpit.com, read my VIX Edge blog, and you will be a better trader for it.
Oh, and also, what's your market on opening domestic box office for Top Gun?
Top Gun? I think it's going to flop.
I'm sold at the 315 level, that's for sure, domestic.
Oh, for sure. Are we just talking U.S. markets?
Yeah, that's all I care about is U.S. Who talks about China?
I'll bet you, I don't know if they'll do 100 million. I'm going to say 110 million, just to be safe.
You're at 110? Interesting.
Yeah.
Tell you what,
is that a flop? That seems like it'd be good these days.
That seems pretty decent in the pandemic world.
You know how expensive that thing was? I mean, and how long they've been holding it. The second weekend will maybe be 15.
What is the carrying cost of a movie these days? Because that one has been carried for a little bit out there. That's quite the gulf. We got 315 and 115, I think you said on the down. 200 million wide market. I love it. What are your thoughts, listeners, on our buddy Mr. Loggins? This song has to be in the movie somewhere. If it's not, I might just tear up my ticket and demand a refund. In the meantime, listeners, you don't need to demand a refund to head on over there to MIAXoptions.com/spikes. That's the place to go to get all the data we're talking about here and a whole bunch more. Shift search, quick strike stuff. It's all there. Again, there's a new Spikes hub coming. I don't know when, but sometime soon. That's going to have a whole bunch of more stuff, cool stuff. Vol surface for Spikes futures, a whole bunch of cool stuff. So stay tuned for that. I think that's in the planning and building stages as we speak. So hopefully, maybe even my next show, I'll be able to tell you all about that. MIAXoptions.com/spikes is the place to go. We have to get on out of here. Thank you, Mr. Loggins, for joining us once again. The check's in the mail, sir. But of course, we'll be back for all you pro folks in about a little less than an hour here to break down the mad week worth of unusual activity out there on Options Oddities. For all of our on-demand folks, this will conclude your broadcast week. I want to thank you for joining us out here this week. It is a long holiday weekend, so no option block, no crypto rundown on Monday. Have a break. Stay safe. Stay sane. We'll see you back here next Friday, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.